Hey everyone, me Kevin here. So obviously the market's a disaster. I'm just hopping on a plane. Obviously not gonna have a market closing live today. However, wanted to talk about a few things. First, this is the largest downtrend that we've now seen over these last 5 months since the great financial crisis. Bitcoin is at an 11-month low. The whole Terra disaster this morning did not help. If you did not yet watch my video on Terra, make sure to go to Meet Crypto. You can also see my community post on this channel, and you can see everything that I think about it. There are a lot of rumors and speculations that take that even to the next level, but that gives you a really good baseline about the fundamentals that'll help you out, and then you can kind of layer the speculation on top of that. Bitcoin obviously falling because of, or at least in part, Terra, but also macro, right? We've been through 5 months of hell. We've now broken every level of support, and there's really this level of malaise in the markets to where you know markets are bad when people who don't usually talk about the markets daily are texting you or calling going, hey, what the F is going on? Like, even when I call JPM to execute trades, because I'm still trading, and of course well, trading or investing, I still send all those alerts to everyone in the Stocks and Psychology Money group, and of course real estate lectures and new videos coming out because we've got a lot of work to do for real estate towards the end of the year. Remember, there's a coupon code expiring for that in 5 days. That's coming up pretty soon here. It'll be the largest price increase ever, and that kind of matches the largest inflation we've got right now, which we'll talk a little bit more about that in just a moment. But more importantly, I want to focus on some of these additional pieces of data here. I was going to say, when I talked to JP Morgan, they're like, this sucks. Like, they're not having any happy phone calls with clients right now. Like, nobody's winning. The people who are winning are people who are just cash. That's the only thing that wins. Even treasuries, we see the yields going down on treasuries right now. So there's some sign that people are trying to jump into treasuries for safety, but we see those things get sold off every time they run. So there's really no safety, it feels like, other than cash. And again, I think, and I've mentioned this a million times, so I'm not going to re-belabor the point, but bottom line, if you're in cash and the only thing you're buying with it are stocks that are going down, you're actually gaining purchasing power, not losing it to inflation. So ignore those people who are like, cash is trash, it loses money to inflation. Dude, no, it doesn't. Nobody's coming to my bank account taking it away. Like, no, that's wrong. It's your money loses purchasing power if you're buying airline tickets, though. Oh, shoot. Anyway. Okay, so here's some facts to know about today so far. Retail investors are still buying right now. Thursday, we had $2.58 billion of inflows. However, we're starting to see some signs of cracking. The inflows are no longer as robust. The average retail investor is now down 28% over the last 5 months. The average retail investor's current portfolio is out of the money 28%. That means you're upside down 28% is the average retail investor. We were down as far as 31% during March of 2020, but during COVID that happened in 2 weeks. Now it's happened over 5 months, and I almost kind of preferred the 2 weeks because it was just quicker. It was less painful for less long, right? Anyway, retail capitulation. This is a really important point that you want to pay attention to. Usually occurs statistically, according to VandeTrack, after 5 days of negative breath. Negative breath is when you have more sell orders than you have buy orders, more shares being sold than buys. That's negative breath. Not to be confused with like meat breath. Anyway, we are now coming on our 3rd day in a row of negative breath. That means potentially tomorrow or Friday could be that 5th day, which then can lead to retail capitulation, and that could be one of the sharpest drops. Right now, most retail traders are still buying towards the end of the day. Institutions seem to be buying or selling at the beginning of the day. Retail is focused on buying calls, and institutions are buying puts. All the calls I bought have gotten destroyed. Recently, of course. Obviously, in the past, I've done well with calls, but not recently. 10-year treasury, we said that falling. We already talked about that. And what's really now magnifying this general malaise in the market is the fear that the Fed's going to have to rug pull us. That we are now seeing service inflation, and inflation's not coming down as quickly as hoped or expected. And that's a problem, because when airline tickets go up 18 to 20% per month over and over and over again, at some point you just need to get people to stop spending money and to prevent a stagflationary environment, and so, or potentially even create it. Geez, that'd be the worst. And what do you end up with there? Potentially an intermeeting Fed rate hike. I don't think that's going to happen, but the market is now pricing that in. especially since this morning Jim Cramer started yapping about the idea that we could have an intermeeting rate hike, that they just need to rug pull us basically and go for a 100 basis point hike or whatever. I don't expect that to happen, but if we get ugly PPI tomorrow, producer price inflation, and then we get bad consumer expectations on Friday, it's gonna suck. Sounds like it's time for me to go. But anyway, look, I'm going to whisper in over here. No flight to safety. Well, there is no safety right now other than cash. There's so much malaise that the only thing that I can say that keeps me, like, somewhat sane is buying a little bit. So every time you buy a little bit, you're not likely to paper hand. Okay, good luck, everybody. This does suck. It's a horrible time, and I'm sorry. I wish you all the best. And we'll see you tomorrow.